Good morning. Good morning. Happy Friday, everybody. Can we get the hat on right? There we go. There we go. Working. I believe so. Maybe tip a little bit that way. I don't know. I left it underneath a pillow. RIP to me. But we're rolling with it, rocking and rolling with it. Happy February 2nd, 2024, the second day of February and the first trading Friday of February. Happy to get it on and see if the market has some opportunity for us. We had some big movers, after hours yesterday, mainly Meta, with Meta offering a dividend, right? And also profits like tripling what they expected. That's been kind of the first, big beat of earnings season. And it's nice because you can get some fun injected into what has otherwise been kind of a lackluster season of reporting. So excited to see if we can get some opportunity there, executing on a number of different stocks post earnings moves, using our post earnings strategy. If you're new here, welcome. This is the Premarket Prep session. We have this session every day at 8:45 a.m. Eastern Standard Time before that opening bell to go over important data that drops, important news, important notes, important analysis. All that gets covered here, and that lays the expectations for the market day. On Monday, we have our deluxe session that lays out the expectations for the week, but those expectations are absolutely key because it helped guide us through what was this week by successful. I'm excited to finish off that first week of February and to continue on. We get an extra day, February this year. It is a leap year, I believe. So I'm happy to get after and take advantage of the extra day because that could be an extra day of making money, right? Good morning, everybody. Alicia, Tage, Coco, Michelle, Cynthia, good morning. Hope you guys had a good night's sleep and you're ready to activate, right? Get up today and execute and activate your inner self, right? That's what we want to shine through each and every day. And that's what those investments in ourselves allow us to do, right? In order for us to reach that place of fulfillment, we've got to make sure that what's deep within us, the real us, is shining through each and every day, and it's not bogged down by, lack of freedom, lack of opportunity, lack of availability, lack of options, right? So anyways, happy Friday. Let's get into it. I'm happy to go over our top news, which is getting the job done. Earnings season made splashy headlines this week with notable tech giants front and center in the latest round of quarterly results. See more on those below as investors continue to size up the state of the market and the companies helping power the AI revolution. Eyes were also on the latest statements from Fed Chair Jerome Powell, who will appear again on 60 Minutes this Sunday. But central bank watchers will have one more big data point to digest before then, with the release of non-farm payroll at 8:30 a.m. Eastern Standard Time today. In terms of jobs day, policymakers need more evidence that the labor market is softening and wage gains are moderating before choosing the next step for monetary policy. Right now, things are in wait-and-see mode as Fed officials take a more measured approach. It's a delicate balancing act as the central bank strives to achieve a so-called soft landing where inflation returns to the 2% level without causing a recession. If it fulfills the central bank's wishes, the number of jobs seen this morning will continue to subside through January. Economists are expecting just that, with the consensus at 170K, down from 216K reported in December, and the outsized 504K reported in January 2023. The unemployment rate is expected to tick up to 3.8% from 3.7% in December, which would be another welcome sign. While there have been some surprises in the past and the numbers can be choppy from month to month, the overall 3-month rolling average for non-farm payrolls growth has been declining fairly steadily, as seen in the chart below. In terms of non-farm payrolls data, we can check that out and see, but I honestly don't expect that to have a huge impact here this morning at all. Let's see what we got going on. Okay. All right. So U.S. labor January non-farm payrolls up 353,000, consensus 185. U.S. January unemployment rate 3.7%, consensus 3.8%. So 3.7% better than expected. Yeah, that's pretty much it. So not anything, groundbreaking on that front. In terms of on the move, we're talking earnings now and earnings fallout / rising. Meta platform soared 15.2% after hours on Thursday to a record $454.81 a share as Q4 earnings smashed expectations. An announcement of the company's first ever dividend also stunned investors, while the social media giant increased its stock buyback authorization by 50 billion and guided to the upside for Q1 revenues. Quote, "We had a good quarter as our community grow," CEO Mark Zuckerberg declared. "We've made a lot of progress on our vision for advancing AI and the metaverse." Seeking Alpha analyst Stephen Fiorillo followed up on, quote, "Meta is setting up for a record-breaking year, and he wouldn't be surprised if it follows Amazon and Alphabet in splitting its shares sometime in 2024. So Meta, a spectacular comeback from lows of like $84 per share to now up to $454. Just shows you, bet on the Zuck, bet on lizard person. Um, People can talk trash and all this stuff platform, but when you're talking trash on that platform, you're proving the point of the platform, right? The fact that you're talking trash about it on it means that there's not nobody using it, right? There's not no users, there's not nobody to advertise to. Meta had a down period and they're bouncing back, and they're bouncing back in a really big way. In terms of tech news here, earnings, Apple was also in the spotlight as concerns about the tech behemoth's presence in China outweighed the end of the fourth straight quarterly sales decline. Cents per share in extended trading, though Apple's services revenue hit an all-time high. That's great. In terms of like what the expectations were, Meta definitely beat the implied move or the expected move. Apple did not. Apple did not move big enough up or down in order to pay if you played earnings. You just got IV crushed. So that's where we're at with Apple. One thing that a lot of times works like after Apple earnings is to just get Apple calls. We'll see how that prospect looks here this morning upon open, but something that's on the docket. It's not law, right? Don't say, "Oh my God, now I got to go out and throw the mortgage on Apple calls." This is just something where generally, depending on, doesn't really matter if Apple does well or Apple doesn't do well. Generally after earnings, Apple will go up. It's not guaranteed, not 100%, but something to be on the lookout for on this Friday, for a little risky zero date action possibly. So let's see here. Okay, so the stock fell to an extended trading. Quote, "I remain very optimistic about China over the long term," CEO Tim Cook countered on an earnings call when asked about the market. The report comes just a day before Apple launched its first new major product in a decade, the Vision Pro. Apple announced a decent set of Q1 results, but the company overall just isn't growing that fast right now, noted Seeking Alpha analyst Bill Maurer. I feel like they're also one that's lagging behind in that AI department. Now, robust revenue. AI was also a theme at Amazon with a new shopping assistant called Rufus that uses generative artificial intelligence to help search for products. Meanwhile, operating income came in above expectations while the firm set strong Q1 guidance, sending Amazon shares up 7.1% to $170.60. AWS continued long-term focus on customers and feature delivery, coupled with new gen AI capabilities like Bedrock, Q, and Trainium, are starting to be reflected in our overall results, said CEO Andy Jassy. CFO Brian Oslowski noted the revenues are accelerating rapidly across all three layers in the Gen AI stack, despite being in relatively early days. In terms of today's markets in Asia, Japan were up 0.4%, Hong Kong down 0.2%, China down 1.5%, India up 0.6%, the FTSE in London up 0.2%, Paris up 0.7%, Frankfurt up 0.8%, the Dow up 0.1%, S&P up 0.6%, NASDAQ up 1%, crude up 0.4%, gold up 0.1%, Bitcoin up 2.6%. We do get consumer sentiment today at 10 a.m. That will be important, right? That will be something that moves markets. So be on the lookout for that 10 a.m. We can get some volatility. What else is happening? EU overcomes threat of Hungary veto to seal $54 billion aid for Ukraine. Because of course we did. New York Community Bank Corp, ticker NYCB, slides further after two downgrades. Plug Power, ticker Plug, ramps up hydrogen production, peers surge. DocuSign sinks as banks eye funding potential $13 billion buyout. Looks like a few banks, I think JPM was one of them. They're looking to band together to buy out DocuSign. Weird that it sinks. I don't know why. Normally when a company gets like bought out or acquired, that's like a good thing. Palantir, ticker PLTR, partners with Australian retailer Coles Supermarkets. Intel, ticker INTC, delays construction timetable for $20 billion Ohio chip facility. Qualcomm's share loss at Samsung puts a damper on results. Then Twilio pairs gains as messaging startup Bird considers takeover offer. Mattel moves, activist calls for sale of Fisher Price and American Girl. What a throwback, American Girl. Peloton, ticker Peloton, hits all-time low after CEO outlines ongoing challenges. Yeah, tough for a stationary bike to make any headway, and that is proving very true here. Peloton has struggled not just this year but over the years, and recently tried to make a push targeting like college students. They just didn't pan. So tough sledding for Peloton, but that's why we're just here trading it, right? We can make money off these companies. You don't have to be invested in companies or have any type of affiliation long term and still have that affect your bottom line in a positive way. But let's make sure we finish out this week strong, execute, and operate in patience. As always, guys, I'm excited to dive into the market, so I won't put that off any longer. Everybody have a great and a safe weekend. Let's dive in and get some analysis done.